Hey, welcome back to The Dive. Today on the show, we have the CEO of GoldMining Inc. Alastair Still is joining us today. He's going to chat with us about what the Fed's next move is, the government's recent support for the mining sector, gold's price action, as well as give us an update on GoldMining Inc. But before we bring Alastair on, do me one quick favor and just go ahead and smash that subscribe button below me there so we can keep bringing you these videos. Hey, Alastair, welcome back to The Dive.
Hey, good morning. Nice to be here today. Thanks, Cassandra.
Okay, so let's start with the macro. The Fed is barreling towards another 75 basis point rate hike at their November meeting. What are your expectations, and do you think that this raises concerns about the long-term economic health of the country?
Well, I think everyone's asking that question. I think you're absolutely right to pose it. I think the Fed is in a position they're definitely having to tackle inflation. But really, there's some point, there's only so far they can go with this. We're seeing debt at record levels, and from a personal and from a countries' perspectives, there's sovereign debts that are at sort of all-time highs. So there's only so far it can go. And I think what we have seen is that even though the rates are high, we're still in a negative real interest rate situation. And historically, when we've seen this in periods in the past, when we're at these negative real interest rates, we're going to get, are there buoyant times for the price of gold? Now, we haven't seen that yet this time around, but we think we could be on the cusp of that. And I think that really ultimately bodes well for an increase in the price of gold.
Do rate hike decisions impact how you conduct business?
Not directly for us. Of course, we're aware of this and we're monitoring the market. The rate hike can affect those who are heavily borrowed. We don't have a big debt. In fact, we have a very healthy balance sheet with a very sizable equity position in gold royalty shares, some close to $60 million on the balance sheet. So we're in a good, healthy financials. But the interest rates really speak to inflation. And as a company that's not currently in construction without an operation, we don't have as much exposure to inflationary pressures as operating companies would do.
Shifting gears, the U.S. Department of Energy announced several grants to battery metal miners this past week. Do you think that we will start to see more government support for energy transition in the U.S.? And if so, what do you think that this means for the mining sector?
Well, I think it's a very relevant question, and I think we're definitely seeing a shift in the demand for certain metals. And when there's a shift in demand, we'll see governments acting to help facilitate providing supply to meet that demand. And we're certainly seeing record demand for metals such as uranium and copper to meet the growing need for electricity and electrification of vehicles. And ultimately, that bodes well for our sector. Mining is still very much an integral part of the economies of the U.S. and Canada, and there's been a big push to have projects come onshore so we can not be reliant on imports. And I think that helps a company such as ours at GoldMining, where we have significant resources throughout the Americas, especially our project in the U.S. in Alaska. Our Whistler project, which we're planning to launch with an IPO into U.S. GoldMining Inc. But the importance of that project is it's close to 10 million gold equivalent ounces, but a good portion of that, almost 30% of that, is a resource that's contained in copper. So with a significant copper resource, with a demand growing for it, and the government wanting to encourage and perhaps even facilitate permitting and development of resources within our own country and within the U.S. and Canada, I think that's a very positive development for our company.
Now, the CEO of Goldman Sachs recently said that this is a time to be cautious as there is a good chance of a recession. Now, despite gold's volatile year, do you think that the upside potential is greater than the downside risks?
Well, I think it's certainly a very telling statement when that comes from Goldman Sachs. But I think historically, when you look at where times have become tough, and gold has a traditional role as a safe haven buying. So I think it's an essential element for people to have in their portfolio, a diversification. I think gold needs to be an important piece of that. But rather than just a defensive buy, I think it's a great opportunity at these current levels. And we've seen the price fall down to the current levels over the last little while, but Gold has held its own against many other measures and against many other indexes and stocks. So I think it's a good safe haven, but also I think, again, with going back to the negative real interest rates we're in right now, that's traditionally been a very opportune time to buy gold. And I think it's a great opportune time now. I'm seeing forecasts, some people talking about gold, $2,500, $3,000 per ounce. I think that's certainly not out of the realm of possibility. Those kind of price increases would be great for those invested in gold, not just the physical metal, but companies such as GoldMining Inc., which provides a very high degree of leverage to the price of gold with a resource endowment we have in our portfolio in the Americas.
It seems like junior miners haven't received much of a lift, despite gold moving up from $1,300 just before the pandemic. Do you think that there is a price level where juniors see capital start to flow in again?
Well, you're absolutely right. The junior miners, the junior developers, explorers, and even for that matter, even some of the major producers have seen some pressure on the stocks, and this is moving as a trend throughout the industry. And I think that's reflecting broadly the overall market conditions from peaks earlier this year, and they've been moving downwards since then as talk of recession loomed, and people became a little jittery on the market. So I think in general, the gold equities have followed the markets, but I also think it can be a breakaway point with the price of gold. And I'm not sure what that price of gold is, but what we're seeing from the producers that their all-in sustaining costs have crept upwards with the price of inflation now towards $1,100 to $1,200 per ounce, an all-in sustaining cost. But that still provides significant margin, even at current prices, which may be closer to $1,650 per ounce. But as the price we predict and believe will rise, to $1,700, $1,800, even $2,000, that provides very healthy margins for the producers. Usually that ties in closely with the developers and the explorers following behind, because as that price of gold rises, as the margins increase, that creates a lot more flow of cash into the industry where exploration increases and companies seek to find new projects to add to their portfolio. Right now, what we've been seeing is there's been a bit of a gap in what companies are spending in exploration. But I think when there's a gap of exploration, producers aren't able to replace what they're mining. So if they're not exploring, they have to go and acquire it. And that's what projects that we have in our portfolio become even more attractive to the majors when they're out looking to fill holes in their pipeline and have somewhat limited exploration budgets.
Okay, so let's talk a little bit more about GoldMining Inc. You recently announced assay results from a Colombian property. Could you walk us through the results, and did they meet your expectations?
Yeah, absolutely. We had a very exciting drill program that started earlier this year on our La Mina project in Colombia, specifically our La Garrucha target. This was a target we'd identified through a previous owner, had done some initial drilling, and had some very encouraging results. We have an adjacent mineral resource estimate on our La Mina property, and we actually announced a preliminary economic assessment on that earlier this year. That showed very strong economics, but what got us excited was that less than a kilometer away from that existing La Mina resource was this La Garrucha target. And we went to explore that with the belief that if we could prove that deposit was there, add resources less than a kilometer away from the existing resource, that would add a tremendous amount of value and help de-risk the project. And the results that we put out just over the last month or two did, in fact, confirm our belief that we have a good deposit there, one that we have now actually begun the work to create a new mineral resource estimate on La Garrucha. And certainly the headline holes, we had a very broad zone of extensive mineralization of some 430 meters at 0.73 gram per ton gold equivalent. So it's a big system, very wide widths. Within that, we have some higher grade zones. And in fact, one of the last hole we announced, we had hit the core of that system, and it was 118 meters at over 1 gram per ton gold equivalent. So the core of the system has some very impressive grades. It looks to be a big system in terms of several hundred meters of width in some of the holes. So we're very excited by that. And we've already begun the work for putting that into a mineral resource estimate. We've completed site visits. We've engaged with an external QP. We've collected samples for metallurgical work. So we're doing all the right steps, and with a very strong technical team to lead us through that mineral resource update on La Mina.
Now, one measure retail investors appear fixated on is the gold to silver ratio. Looking at its current level, do you view it as presenting further opportunities for gold mining, or do you view the measure as outdated?
Well, it's always a reference in time to what the spot prices are. I would say we're fairly unaffected by it. We're primarily our resources are primarily gold. We do have some secondary silver occurring with our deposits, but I think it's really just a reference point to try and benchmark the gold and silver prices as they've progressed over time. It's not really a great indication for measuring the wealth of a deposit or a company. I think it really has not a huge impact on us, although we have some small resources in silver, but we're primarily gold focused, so it's not as relevant a metric for us.
Okay, so one more thing before we let you go here, Alastair. For investors watching, are there any significant timelines or milestones that they should be watching out for with GoldMining Inc?
Well, there are a couple of key events on our horizon, and we've talked about how we've been de-risking our portfolio and unlocking value from it. We had a very important year just this past, and we created the new entity called Gold Royalty Corporation. We spun that out from our internal portfolio. We wrote royalties on our properties. We put that through an IPO. It raised $90 million, so that was a great validation of our assets. It's incredible strength to our balance sheet. We have almost 21 million shares in Gold Royalty Corp. But that was a great catalyst to show how we can further unlock value going forward. So an important milestone for us coming up will be the proposed launch of US GoldMining Inc. It's a great opportunity for exposure to one of our largest assets, our Whistler project, which is in Alaska. It's a gold copper project with close to 10 million ounces gold equivalent. We've recently received our permits for drilling on that, so we're ready to go. We'll be looking to launch that with an IPO in the coming months, so stay tuned for that. That's an important milestone for us. And I think also, as we've mentioned earlier in this interview, the results that we've had at La Mina with our drill program in Colombia have shown that we can add significant value with a fairly modest drill program. We will be adding new resources there, and stay tuned for a new mineral resource update on La Mina in the coming months as well.
Okay, great. Well, thank you so much for coming on today and giving us the update. We'll talk to you again soon, Alastair.
Pleasure to be here. Thanks for having me on today.
Thanks so much for tuning in today. We'll be back again tomorrow. But in the meantime, why don't you check out one of our other videos over there?